Okay, so this will be recorded and we shall have a recording of the class. Now, as I had said earlier, I will have a small introductory video and we shall be talking about Forex. Okay, so I'll stop this screen and jump to the video right away. Okay, and this is what we shall share now.
Oh, yeah, I'm not, is there sound? I'm not still hearing any sound, Tom.
Yes, there is sound.
Oh, I'm yet to hear sound. And secondly, how long is this lesson taking?
This is less than 5 minutes.
No, the whole lesson of this morning.
30 minutes. 30 minutes.
Oh, okay, fine.
Yeah.
Okay.
Okay, that's it. I just wanted to give you a little snippet of what Forex is. And from there, then I'll pick it up. Now, my assumption is most of you, if not all of you, do have an idea now what Forex is. At least even if you don't know the details, then you've definitely talked to me, and you have an idea of what Forex is all about. Now, if you still have any doubts, you can ask, but more importantly, we shall try and fast track the class. Now, the mode of our class will be purely online, like I said earlier, and give you a chance to practice what we are learning in class. So 2 times a week, Monday and Wednesday, we'll have a small session like this. And the idea then is for me to give you a little nugget, like little heads up things for you to do over the week. But a bulk of the time will be your work, your effort. So having said that, Mine is just to give you an overview, and then from then on, I'll be more of a coach or a guide, okay, to help you understand this Forex, all right? So this is the introductory page. Now, why are we doing this? There is a reason why I'm doing this. There is something that I'm calling the pre-FTMO, okay? I guess the people who are still coming in late. So there's something we call the FTMO. FTMO is a company, a European company, that actually provides funding for people who want to trade. Now you'll realize very quickly that one of the biggest problems that Forex traders have is once they know how to trade, then they get stuck. They get stuck in the sense that they don't have the huge capital, that might make their trading meaningful. Now, there are people who trade and they trade their $50, $100, and so on and so on. I can tell you for free that those people are just playing. That is not serious trading. There is a big, big, big potential in Forex, but you can't make anything meaningful out of $50 or even $100. All right. That's why you find people who do 50 or 100, they will get frustrated and eventually they will just disappear. So my goal over the next 4 weeks is to, one, prepare you so that you know what Forex is, you know how to trade, but more importantly, to enable you to enter into this, what I'm calling the FTMO challenge. So FTMO is a company, but it allows you to use their money to trade. In other words, after I teach you how to trade, I'm not leaving you like that. I am saying I will introduce you to a prop firm, which then allows you to trade using their money. And if you're diligent, you can make a lot of money from that. Okay. All right. Now, to enter into this class and to enter and to be eligible to be funded by FTMO prop firm, this is a private group and management reserves the right of admission and membership. So basically, this small group here that I've made, it is a paid membership group. That's why I have to basically admit each one of you as you come in. It's not for everybody. And members will not share other links without permission from admin. I am the admin in the group. So in that small group, the WhatsApp group, my idea is nobody should share anything without permission. This is strictly for Forex. It's strictly for us to learn. So if you have anything outside Forex, please don't share it in this group. Okay. So while that is going on, I'm assuming that all of us will be respectful of each other, especially if you have differing opinions. I believe that maybe we will not even get the point where we shall differ since we are all learning, all right? And abuse of this will result in being left from the group. I hope that doesn't happen. And as of now, it has never happened for the people that I'm teaching, especially in a smaller group. So having said that, now, in general, you may have seen this slide before for many of you. And for those of you who was not with me for a while, this whole thing is for you, for me, to teach you how to learn Forex trading, okay? And how to be successful at, doing it. So usually the questions that I will address, even in the going, is, is Forex trading a scam? Is it betting? Well, I'll tell you right away, Forex trading in itself is not a scam. Now, there are scammers who have used Forex trading as an excuse. Why? Because it is probably one of the least misunderstood, okay, new thing Hence, it's easy to cheat people. Okay. So for you, I'm challenging you to be diligent to learn what it is. It is not a scam. It is the buying and selling of currencies. It is just buying and selling of currency. If somebody comes to you with anything other than that, then that is a scam. If somebody comes and tell you, oh, you'll make money from recruiting people, no. Forex is not about recruiting people, okay? And then also avoid the people who will tell you, oh, give me your money and I will trade for you. I will trade for you, and then I'll give you like 5% or 10%, whatever, on a monthly basis. No, unless they are a fund management company, please avoid such people, all right? And then, is it betting? Now, betting is basically gambling. Forex is not gambling. Here you are learning what it is to buy and sell currencies in the big worldwide market. Okay, so we shall be learning what Forex trading is and what it is not. Okay, and our classes will include learning a bit of what we call the Forex financial market structure and the basics around it, so that we shall know the common, you've heard of people who are buying and selling things. They always say, buy low and sell high. It's an age-old word that every business person knows. For those of you who, go to the market, you always sometimes even go and negotiate when you're buying your goods. But those people in the market bought whatever they have from the farmers or from wherever they got them from at a much lower price. And they have to sell it to you at a slightly higher price for them to make a little profit, a little margin. Okay. So one of my goals in this process is to teach you guys to make what we're calling 100 pips daily. So that word pips is basically what I'll explain the details later on, but basically it's just a way of telling you that you're making some money. Okay. I will explain what a pip is. Then we shall learn the discipline of protecting your capital. So learning how to make pips is good, but learning how to protect your capital is even better. Or rather, ultimately, that's your goal, to protect your capital first and foremost. Okay, and then finally, our goal then is to try and learn how you can double your capital in Forex. So if your capital is, let's say, minimum $1,000, are you able to double it up? Okay, so I will teach you how you can grow an account through first making pips, then two, learning how to protect that capital, and eventually, slowly, incrementally doubling your capital. All right. So this class will pretty much be theory and practice, where this is the theory where I am talking to you live, but a lot of the practice will be on you. I will do a few things here and there, but you will be the one doing most of the practice. Okay. So this is our proposal for the next 4 weeks. So you need to tighten your belts and get ready for this exciting ride. All right. So what shall we cover in this course? Now, this course is going to be about 4 weeks, and I made it deliberately 4 weeks. Why? Because I know people are busy. Then also, Forex is wide. Even if I gave you 1 year or 2 years, you might never know everything in Forex. So rather than touch a little bit of everything in the whole world, we shall focus. We shall only focus on particularly how to make money, and specifically using one strategy. All right. So back to our main question. Main question of the day is, what is Forex? And yes, we have seen a bit of the video, And I just want to reiterate that actually Forex is nothing new for many of you. Okay, what is Forex? So we said it is the exchange, okay, the exchange of currencies. Now, specifically, it's not just exchange of currency, it is actually exchange of foreign currency. That's why it's called Forex. Okay. Now, in a very, very simplistic manner, for many of you who have gone and exchanged money in the Forex bureaus, you know what that means. You come with one particular currency, okay? Let's say if it's Kenya shillings, for those who have traveled or you're traveling and so on, and you want to go maybe to the UK, well, clearly you can't use Kenya shillings in the UK. So you have to convert that into euros or pounds, okay? Meaning the Kenya shillings you have, maybe if it is 150, you'll be told that 150 Kenya shillings will only give you maybe £1. Now, this exchange of Kenya shillings to pound is what we call foreign exchange. Okay. Similarly, if you're in Europe and you want to travel from the UK and you want to go to maybe France or Switzerland or other places, you may have to convert the pounds into euros. So converting a pound into euro, again, that's another whole thing. So you might find that the pound, 1 pound maybe is like 1.005 over euro. All right. It is this exchange that we are calling Forex. Okay. So Forex is nothing but just exchange of currencies from one currency to another. Sometimes you exchange it as a business, and sometimes because you need it to travel. So for many of you who have either worked in the bank or still work in the bank, because I know that some of you are, you'll find that the Forex market is heavily transacted by the big banks. Okay, so we have the big banks are the big guys in this industry. Why? Because they're always exchanging currency. They're buying dollars, selling euros, depending on where the money is needed. So, for example, let's pretend that like a manufacturing company in Nairobi wants to buy, goods maybe in the UK or China, for that matter. You can't use the Kenya shillings, right? You'll go to your bank and you say, oh, I want to buy a machine from China, and I've been told I have to pay $100,000. So you'll have to go to your bank. Your bank will have to make the arrangement to convert whatever Kenya shillings you have into dollars. Okay, why? Because you've been quoted what you need in dollars by the Chinese manufacturer. So the big banks are the guys who move the money. So you can imagine you as an individual, you go to the bank and you say, I need to send $100,000, and you're only one client, assuming there are 3,000 or 10,000 clients of that bank, and each is busy buying and selling of that currency. So you find at the end of the day, the biggest mover of Forex are the financial institutions. And they do have people in there who also trade for them. So there are banks that do that. They do it on behalf of businesses, okay, manufacturing businesses, importation, on etc. So the banks move the big money. There are other players in Forex, and a number of them are, apart from the banks, there's insurance companies, okay? big insurance companies, most of them go in to actually invest, okay, insurance. They invest their money and trade in Forex on behalf of their clients. Now, their clients don't know that they actually are trading. Their clients, many of them put their money, for retirement or for whatever, it has to create, grow. So what they do, they actually invest in other firms that then invest, that actually trade in the Forex. So insurances are big, banks are big, then specific companies, let's say Apple, okay? Apple or maybe BMW or whatever, those big companies that use a lot of foreign exchange, maybe to the manufacturers. So those are the guys who actually move the money in the Forex world, okay? So then I'm sure then the question that comes now is then how do we make money? How do we make money in Forex? Well, I tried to explain a little earlier, uh, like when you move or you want to exchange your dollars into whatever, in the process, you either make or you lose money. It is that idea, that concept that now is grown, where grown is applied at large scale. Then you actually make or lose money. So how do we make money? We make money by, let me see, okay. If, for example, $1, I'll now use dollars now, okay. If you're using dollars, okay, $1 is equals to, I think right now about 105 Kenyan shillings, okay, and you have $1,000. So $1,000 will be 105,000 Kenyan shillings. Now, assuming you have this amount of money today, this morning, and later on, by the end of the day, or tomorrow, or even the next 1 hour, okay, something happens in the UK or in the US, yeah, in fact, the US, with the election issues, and suppose Trump decides that he will not leave office. Okay, just an example. He will not leave office. Then the economy will get jittery. People will think the US is not very safe. Why? Because there will be riots in the streets and so on and so on. Okay. So you'll find suddenly the value of the dollar will go down compared to the Kenyan shillings. So whereas initially you could actually you have to pay 105 Kenyan shillings, you might suddenly find that, oh, it has actually changed. It's no longer 1,000 shillings, but now, sorry, for your $1, you not only get 105, but now you are told that it has gone up. You're actually getting 120. For your $1, you'll get 120 Kenya shillings. Well, for your $1,000, suddenly you will have 120,000 Kenya shillings. What has happened? What has happened is your money has suddenly increased. Why? Because of the volatility in the Forex market. If Trump continues insisting on being in power, you might find that the value of the dollar even goes lower. And before long, you might be getting even more value for your $1. All right. So in Forex, what we do, we take advantage of those changes and make money. How? Well, specifically, what happens is when I said the value of the Kenya shillings versus the dollar, or any other pair, think of the euro and USD. when you take a pair of two currencies, for example, the one we shall use mostly all along will be the popular euro to the dollar. Okay, why? Because euro and the dollar are the most highly used currencies in the world. Okay, the euro and the USD. So this pair of euro and USD is considered the most volatile currency in the world. Therefore, you'll find that, of course, you all know that the euro is stronger than the dollar. All right, you'll find that maybe 1 euro is about maybe about 1.3, maybe 25, okay, 0 of a dollar. So if you have 1 euro, you actually have more dollars, and the converse is true. If you have $1, you have less number of euros. All right. So it is this exchange here that we play around with. Okay. If this is 1 and this is 1.3250, okay, and things in the US start getting bad, so that now this keeps changing, going higher to maybe 1.3, maybe 550. This small change here, however small it is, has a big impact on what's going on. So essentially, if this is the new value of the euro USD, then we can say the money has increased, or rather, or maybe has gone down by, if you subtract here, you'll find this is 0.003. Now, this is a ratio. Euro USD is a ratio. Hence, we cannot say that this is 300 euros or $300. No. This is what I was trying to allude to earlier, that this exchange is what we call pips. Okay? Where pips stands for price interest points. So the exchange here is 300 pips. Throughout our course, throughout our learning, we shall dwell only on what we call pips, where pips is the price interest points. So as these ratios go up and down, essentially we are making or losing pips. So we shall pick any currency and we see if it's moving down or going up or down. So in closing on this particular topic, I know we started a bit late, so I'll give you guys an extra 5 minutes, and then there'll be some questions and answers before we continue. So very quickly, the platform we shall use or use in Forex, all of them without fail have this kind of structure. Okay. In fact, it's just an X and Y, but let me see if I can erase this. Okay. So on the X-axis is time. Okay. And on the Y-axis is that ratio, the currency. Okay. So for lack of better word, let me use this dollar sign. Okay. So if this was 1.3200, this could be 1.325, 1. And so on. As you go up, the value of that goes up. Okay. Similarly, as you go down, the value of that ratio goes down. So this is time, where time is, this is the past, time X. All right. But right here is now, the time right now. Okay. Like right now. But if I was to draw like a graph going up and down, the rightmost value of that graph will be telling us what value of the currency, the market goes up and down. So currently,